Are these special forces agents or just people that work for the IRS? That's my question. Because according to this new job posting, this new job description that the IRS just put out, they need people that can carry firearms, and they need people that are willing to go on some very dangerous assignments. I mean, it's like they're recruiting for the army or something, right? I mean, this is like manna from heaven for Ted Cruz and some others that are accusing the Biden administration of putting together their own special army of IRS agents. I mean, who knew that an IRS agent needed to be able to operate a firearm? Hello, welcome to the program, everyone. I am Trish Regan. Great to have you here. Do me this favor. If you haven't already, go to Apple iTunes, subscribe to the show. It is so important. I am there on Apple iTunes, the full audio version of the podcast every single day. So do that. Subscribe on Apple iTunes to The Trish Regan Show if you haven't already. And portions of today's program are brought to you by Legacy Precious Metals. There's never been a better time to invest in precious metals than right now. We'll talk a little bit more about that in just a moment. But I first want to start here, and we're going to talk about inflation too, because believe me, we're not out of the woods. And I have a feeling, just a little tiny feeling, that the Fed will probably make it worse rather than better. That's their MO, after all. But I'm just blown away by this. I mean, again, you know, look, it's the IRS, right? So the IRS has the reputation it has for being just awful and bureaucratic and all those things, and nobody really likes them. And of course, everybody fears them. I understand it. I get it. They apparently, and maybe this has always been the case, I don't know, but it's being called to attention that the new job posting requires you to be able to legally carry a firearm. Very, very interesting stuff, right? Why would you need a firearm at the IRS? Well, it goes on. The job description says you must maintain a level of fitness necessary to effectively respond to life-threatening situations on the job. What are these IRS agents doing? How would it be a life-threatening situation when you're calculating numbers? I mean, wouldn't you bring in like some other teams for the stuff that's going to involve the firearms, right? And the dangerous situations? I think it's a question worth asking. You need to, quote, be willing and able to participate in arrests, execution of search warrants, and other dangerous assignments. Look, the administration is kind of in the hot seat right now because, one, nobody likes the IRS. Everybody should be paying their taxes, of course. I'm not encouraging anything other than that. So don't try and read anything into this, those on the left that might think otherwise. We do need some accountability there. So I'm not against that. But I just find it rather strange that they're hiring 80,000 new IRS agents. Apparently they want to grow the agency, according to the fact checkers at the Washington Post, by 25 to 30%. So they want to get the agency personnel sort of bigger, stronger, and apparently armed with firearms. Not great. Not great at a time when, by the way, you guys, you Democrats like Kristen Sinema just gave an extension of that massive tax loophole to some of the wealthiest people in America, private equity executives that get paid by their clients. They get their income treated as investment instead of income. So they pay a way lower rate. I mean, if you ask me, like, you ought to be actually enforcing some of the basics. And while they're doing that legally, it's just wrong. I do not think that this sounds very good. I don't like the idea of IRS agents being armed and dangerous. This is just bad. All right. I want to turn, by the way, to the economy because we did get some inflation data this week that suggests things are improving on the inflation front. We've come down slightly from the very elevated 9.1% increase that we had just recently seen in inflation. And now we're down in the 8 range. And the hope is, maybe this thing has peaked. I'm not sure about that. But even if it has, it's going to linger. It will linger, and it will continue to be a drag on this economy because it's lingering, because the Federal Reserve feels like, okay, well, we got to come in, we got to step in, we got to do something. And every time the Fed steps in and does something, what goes wrong. I mean, just look back, certainly throughout my career, as I look at it, especially going into 2008 and the aftermath of 2008, They just got it all wrong. They're always a day late, dollar short. Or I guess in this case, they had $6 trillion too much. But now we run the risk that they're going to have sort of the opposite of the expected or intended effect, in that they'll pull back too much, right? They push too hard on the economy, and now they're going to pull the reins in too much. And what that means is that we could be gearing up for a much, much bigger recession than we even need, because they're focused on the inflation, which I get. They have to be focused on. It's their own doing. But in trying to pull that in, will they actually cause much bigger problems? These are questions that are coming up and need to be addressed and need to be asked and need to be thought out, because clearly these guys and gals over at the Fed don't really think through it all. It's one of the reasons why, again, I go back to the need for a diversified portfolio. There's lots of ways to diversify. We're going to talk to Charlie Dombeck from Key City Capital coming up on some of the ways that he chooses to diversify his clients' portfolios. One way is through real estate, but the other way, that's pretty basic to me anyway, is through gold, because gold is one of those assets that the Fed can't really have as direct an effect on. So you want things that the Fed just can't hit as hard or inflate as much. Gold is that. I mean, a lot of people say silver as well. It's one of the reasons why I do think you should look at these precious metals. The company that I trust for that, one of our great sponsors here on the Trish Regan Show, is Legacy Precious Metals. LegacyPMInvestments.com is their website. You can get a free guide to investing there on the website, or you can call 1-866-589-0560. Again, it's 1-866-589-0560. Call my friends over there. Again, welcome to use my name. And learn how you can get a gold-backed IRA to protect you against this tsunami of inflation. Even if it doesn't go up from here, it's still here, right? It's still in this very high range. And look, wages just aren't keeping up. You got wages increasing by roughly 5% and change, while inflation is still upwards of 8%. So it doesn't really work, especially over the long haul. So go to LegacyPMInvestments.com for more today. Anyway, turning back to all this, it's really kind of a mess. I mean, it doesn't make a ton of sense. You would think that with all the people that have left the economy, job market, right, have left the job market, that the economy would consequently suffer because people wouldn't have as much money to spend. But because of inflation, they do, right? And don't forget that the federal government gave them so much money over the last couple of years. And there were plenty of handouts, and all of that was good in that Americans were able to save, but bad in that it did lead to the inflation that we now see today. And so one of the things that you need to think about is, how do I invest in this really strange, wacky economy? And so earlier today, I sat down with Charlie Dombeck from Key City Capital. Go to keycitycapital.com/Trish for more, by the way. But listen to this interview, because Charlie has some really good insights on just ways to get out of the traditional investing vehicles. I mean, you obviously still do that too with having money in the markets, but look at some other stuff. I mean, I call it in some ways a back to basics. There are lots of things you can and should be investing in right now. Take a listen. Here to break it all down with us today, we have back on the show Charlie Dombeck from Key City Capital, keycitycapital.com, which looks at all kinds of ways to invest in this environment. He's here to help make sense of it. Charlie, good to see you again.
Great to be here, Trish.
Wow. Okay, so good news, right? It looks like inflation's coming down a little bit. I mean, not enough, frankly, when you look at how wage gains have been unable to keep up. But nonetheless, I'm encouraged. But it's strange, right? Like, it's really strange. You still have a lot of inflation. You got a job market that's healthy. I mean, what's your take on it all?
Yeah, it's a very different recessionary environment that we've ever experienced in the history of our country. And the job statistics came out about a week ago, and we had nearly double what was expected in terms of job increases, which is quite healthy for the economy. Low employment, unemployment is good in general, right? And I think what we had is just a lot of people did not return to the workforce after COVID. We have an aging population, and many people just said, I'm done. I'm leaving the workforce. And so there's a very tight labor market out there. But we still have ultra high inflation. I think inflation has peaked. Wage gains, which have been significant, have not kept pace with inflation. So we're seeing pressure on the consumer, especially the middle American. And we, by definition, are in a recessionary environment, albeit a little bit different than what we've experienced in the past.
For sure. You just said something really important, though, which I think, if you're right, would suggest the Fed is going to have a very hard time ahead. You said you think inflation has peaked. So if inflation, in fact, has peaked and we're working our way through this, are we in any kind of danger that the Fed once again tries to overdo it and raises rates too fast, too much, and does other bad stuff to the economy as a result?
Yeah, I think that's the real risk is the fact that we have a very strong job market puts a lot of pressure on the Fed to continue to ratchet up interest rates. Look, inflation came down largely because energy prices tapered off, but we still saw pretty strong increases in food, right? Shelter inflation is up as well. So it's costing more to rent an apartment, which is good for our business. But we've got a lot of pressure on the Fed to continue their interest rate increases, which puts pressure overall on the economy and potentially kind of eliminates the ability to have that soft landing. Maybe it happens, but I still think there's a lot of risk out there. And what I tell people right now is we've been fairly fortunate. We've recovered maybe 15% of the market losses in the last month and a half. I still think we're in for a lot of volatility. I don't think the gains are sustainable. I think we've got maybe another 10 to 15% of downward pressure on the markets, especially if the Federal Reserve has to stay aggressive, which I think they have to do.
So you think that we could actually be down 10 to 15% more in the equity markets?
I do. And I tell people, look, we've had immense gains over the last 4 or 5 years. We took a lot of capital off the table with our clients over the last 6 to 9 months. Now's a good time to reposition, maybe take some of that risk again off the table now that we've recovered, say, 10 to 15% in most clients' portfolios, and diversify. The whole value proposition we have as a company is we help clients accelerate the way they grow their wealth by diversifying and moving some capital away from the markets into the real estate and the alternatives. That is the secret recipe or secret sauce that I have found that's worked over a career of work as a CPA, just by counting people's wealth and seeing what works and what doesn't work.
Charlie, in some ways, it's kind of like the old-fashioned way. I mean, my aunt really was a wonderful woman, recently passed away, and she didn't have it. She had a high school education. She had 6 kids. But yet she was able to acquire a fair amount through a small version of what you guys do, real estate and real estate investing. And she'd get these properties and she'd fix them up and she'd rent them out. And before you knew it, she had accumulated what would be some decent sized wealth for herself through just investing, but not in the stock market. It wouldn't have, I think, necessarily have been so accessible to her. And nowadays, it's kind of shifted, right? Like a lot of people, immediately you get a financial advisor, boom, you're in the equity markets. What you're talking about, in some ways, feels like this return to basics, like just investing in things you can kind of get your head around and understand, in businesses and in properties that generate an income stream, which for her became really significant. I mean, that was her livelihood.
Yeah, that is a key point. The passive rental real estate is a key asset class that every American should have in their portfolio. And the reality is you can't find those opportunities in the stock market. You're not going to find them in the financial markets. They're typically off-market investment opportunities. In the case of your aunt, she was successful building her own portfolio. We do that on a large scale. And what you find in this environment is it is getting back to basics. It's finding those investments that represent a store of value that are going to perform well, regardless of whether the Fed continues its aggressive interest rate stance, whether we have continued inflation. And I just look to some of the assets that we've acquired over the last 12 to 18 months. In our large acquisition in Memphis, for example, we have 1,264 units there. And we're just finishing after 12 months, the renovations to many of the units there. And the rental rates that we're getting on our turned units are rates that we projected to get 3 years from now. And that's all coming as a result of inflation and as a result of rising interest rates. So maybe you don't get the big appreciation in your portfolio in a high interest rate environment, but you get great cash flow. And it's really about finding those stores of value, finding those things that cash flow. It's a very safe environment to put your capital.
No, the cash flow that was quite important for her. And what you're talking about doing is what she did, like on a much bigger scale, because a lot of people, they don't have the time. Not that she did with the 6 kids, but in other words, a lot of people just don't have the time, right, to be managing those properties. And so that's where you guys come in, both from a identifying value and then, of course, managing the properties as well.
Exactly. I mean, we provide a turnkey service where we provide access to direct ownership in rental real estate through a portfolio of assets. Typically, our funds have $500 to $600 million in rental assets spread across these landlord-friendly states in the South, typically Tennessee, Texas, and Florida. This is where we've been for the last 4 to 5 years. And what we're seeing is continued population growth in these areas, major corporate moves, a lot of runway left in these jurisdictions. This is where people need to park their capital into these states where we see strong growth.
And one last thing, just before I let you go, what makes you guys different from a REIT investment
So a REIT
that you
doesn't
would
give
buy
you
on the market?
A REIT does not give you direct ownership in a portfolio of assets. So a REIT is a financial instrument. A REIT will not give you all of the elements from a rate of return that direct ownership does. For example, you don't get a flow-through depreciation deduction. What I tell people in our funds, the preferred rates of return and the share of rental profits that you receive during the early to mid years in our fund are tax neutral. You don't have income from the rents that drops onto your 1040, which ultimately boosts your rate of return. So in a fund structure like ours, you're typically going to get better performance, better tax benefits than investing in a REIT. And there's no fees. There's no brokerage fees. There's no commissions. When you invest $100,000 in our fund, you get direct capital that goes into the fund without any commissions or reductions.
Ooh, so how do you guys get paid?
So we get paid off the split. So there's a sharing of profits between you as investors and us as operators. Investors receive an 80% share. We receive 20%. So when the funds perform well, we all do well. And that's a win-win scenario. Very different than
it's like a private equity style investment.
It is very much like a
regular
private
folks.
equity investment. Yeah.
Very good. So interesting. I really encourage people to check you guys out. I like hearing about these different ways, right? People need to be creative and, as I say, kind of get back to basics in some respects so they can go talk to you or one of your colleagues there at keycitycapital.com. Charlie Domback again from keycitycapital.com/Trish, my name, or just go to keycitycapital.com and start planning your future today. I think it's really important. Charlie, good to see you. Thank you.
Great to be here.
Again, my thanks to Charlie. Always a pleasure to have him on the show, and I hope you learned something. Think about it. I mean, if you're looking for other places to diversify into, this is very much, I think, in your interest. Go to keycitycapital.com/Trish for more. Again, keycitycapital.com/Trish, and you can talk to Charlie and his team about it today. All right, we got a lot more coming this way. I had an experience I can't wait to tell you about. It's not necessarily a good thing. It's a big commentary on the sort of disastrous situation we find ourselves in socially now as a nation. I want to share that with you. It's going to be on the program on Monday, so make sure you tune in for that. And do me the favor of subscribing to the video channel on YouTube and on Rumble, and of course, going to Apple iTunes. Go to Spotify as well while you're at it, if you really want to do me a favor, and subscribe. It's all free to the show there as well. I'm here every day with you. We're on a mission. We need to make sure that we protect our country, we protect our freedoms for generations to come. Have a great weekend, everyone. I'll see you Monday.